to the Hughes Optioneering Weekly Workshop, where we scientifically engineer trades for greater profit potential. This is the disclaimer slide. You can pause to read it. We're going to move on. Today we're going to look at VRT, or Vertiv Holding Co. VRT engages in the design, manufacture, and service of critical digital infrastructure technology that powers, cools, deploys, secures, and maintains electronics that process, store, and transmit data. Here's the barchart.com technical opinion rating for VRT. The bar chart rating is a 100% buy with the strongest short-term outlook on maintaining the current direction. Long-term indicators fully support a continuation of the trend. According to Prime Trade Select rules, a stock is in a bull trend on a monthly basis if the stock price is above the 10-period or 10-month simple moving average. The monthly chart shows that VRT is way above the moving average line, so the monthly trend in VRT is up. Now we're going to look at the daily chart. The stock is in a bull trend on a daily basis if the 50-period or 50-day exponential moving average is above the 100-day exponential moving average. The blue line is the 50-day EMA line, and the green line is the 100-day EMA line. The blue line crossed back above the green line in May, so the daily trend in VRT is up. Next, we're going to look at our daily chart that displays the Keltner channel. As a rule, we don't want to buy calls if the stock price is above the upper Keltner channel line. Anywhere inside the Keltner channel or even below the Keltner channel is fine. VRT is below the upper Keltner channel line, so VRT is inside the buy zone. Since the trend is up, we want to buy a call. VRT has plenty of option chains to choose from. We're going to use the January 19 option chain. Right now, the Jan 19 options have 61 days to expiration. Here's the VRT option chain for Jan 19. VRT closed at 43.29 on Friday. That means any calls on the list from 2.5 to 42.5 are in the money. Let's take a look at the profit potential for purchasing the 42.5 strike call, which is the closest strike to the current price of the stock. The bid-ask spread for the 42.5 call is 390 to 420. We try to enter at the midpoint, so we'll use 405 as the buy price. Our call option calculator shows the profit potential for this call based on VRT price changes at option expiration from flat to a 12.5% increase in price. We can see that if the VRT stock price is flat at 43.29 at option expiration, the 42.5 call will lose 80.5% of its value. Ouch! This is an unacceptable risk. That kind of loss can wipe out our trading account in a hurry. We developed what we call the 1% rule to help us avoid this kind of risk. The 1% rule says to limit the time value portion of the option we buy to 1% of the stock price. That means the stock only has to move up 1% for the call option we purchase to break even and start profiting. Now let's take a look at buying the 35 strike call to see if it qualifies for the 1% rule. Here's the call option calculator picture for the 35 call. According to the 1% rule, we want the call to at least break even if the stock price is up 1%. The calculator picture shows that if the VRT stock price is up 1%, the 35 call will lose 5.7% of its value. We want that to be break even or better, so the 35 call does not meet our requirements. Let's see if the 30 call will work. The bid-ask spread for the 30 call is 13.20 to 14.30. We try to enter at the midpoint, so we'll use 13.70 as the buy price. We try to enter near the midpoint, so we'll use 13.70 as the buy price. The 30 call works. If the VRT stock price is up 1%, the 30 call will make a 0.2% or $2 profit. That's better than break even, so the 30 call is the one we'll buy. The call option purchase calculator also shows that if the VRT stock price increases by 2.5%, the 30 call will make a 4.9% or $67 profit. If the VRT stock price increases by 5%, the 30 call will make a 12.8% or $175 profit. If the VRT stock price increases by 7.5%, the 30 call will make a 20.7% or $284 profit. The 10% and 12.5% numbers are also displayed. You can see that the profits get better and better. And notice that if the VRT stock price does not make the expected move up and it remains flat at expiration, the 30 call would only lose minus 3% or minus $41 compared to the minus 80.5% or minus $326 loss for the 42.5 strike call that we looked at earlier. Now we want to review a call option debit spread, aka a vertical call spread. For this spread, we want to buy to open the VRT January 19 35 strike call and sell to open the VRT January 19 40 strike call. We're going to base our entry prices on the midpoint between the bid and ask prices. That means we'll buy the 35 call for $9.25 and sell the 40 call for $5.50. $9.25 minus $5.50 equals $3.75. So the entry price or debit cost for the spread is $375. The call option spread analysis calculator picture shows that the spread will make a 33.3% or a $125 profit if the VRT stock price declines by 7.5%, remains flat, or increases in price when the options expire. Creating the debit spread will allow us to collect a $550 cash credit to our brokerage account for the sale of the 40 call. As we said on the previous slide, this reduces the cost of entering the spread to $375. Here's a note regarding earnings reports. The next VRT earnings report is scheduled for January 24, 2024. Let's review the trades one more time. The first trade was a call purchase. It said to buy to open the VRT January 19 30 strike call for $13.70. We also reviewed the spread. The spread said to buy to open the VRT January 19 35 strike call and sell to open the VRT January 19 40 strike call at a debit of $3.75. That's it for this week's Optioneering Workshop. Thank you for joining us. We look forward to seeing you again next week.